What's going on, guys? So today I'm going to be doing a bit of a new thing. I'm going to be doing an investing video, which, if any of you know my channel, it's usually a gaming channel. So we'll see how this goes. If you like it, don't forget to like it and subscribe it. That helps me out. So I'll get into it. So the first thing, so this video is about support and resistance. I'm going to cover other investing topics in later videos if people end up liking this. So to give you a basic idea of support and resistance, resistance is where the price point, as you can see all these candles, like some of them kind of get held up and they start touching like almost an imaginary line right here. As you can see, this candle, and this candle, and that's resistance. All right, and there are a lot that can appear on the graph, like this one can continue further down here. There are some that are up here. Okay, and then a support would be pretty much the opposite of resistance. It's where the price point keeps touching from the bottom. So like here we see the candles are kind of touching this imaginary line on the very bottom. As you can see, this candle, and this candle. And so that's, this is a resistance, this is a support. Now, why that's relevant in investing. So if you're thinking of taking a trade when it's near resistance, and you know that the nearest support is down here, well, you have a chance of, if the price doesn't break through, it could drop all the way down here, and that would be losing 2%. Or you can take a trade down here, and you have a chance of making, that 2% to the upside. And so as you can probably assume, most people tend to invest down towards, around the support levels, and then they either pull out or they hope for the best and ride through this resistance level. Now, another thing to take note of is that old resistance levels become new support levels. So as you can see that there's a resistance level right here, and if we look farther down here, we can draw a line right here, and that's the new support for this little probably 20-minute trend. And then we can draw another resistance up here, which pretty much just goes to show you that old resistances become new supports. Now, supports and resistances can come in a few different forms. Some of them they might not all be completely horizontal like I've been showing you. For example, like down here, like you could probably draw a line right here and another line right here. And you can see the price action is pretty much obeying those two lines for a good hour. And there are a lot of different types of supports and resistances. They can come in different forms that I won't go over in this video, but I'll put a link or two down in the description so you guys can check out later. Another thing to keep track of is EMAs. These are EMAs, all these squiggly lines. Now, why they're important is because they can act as support and resistance levels too. So let me try to find a good example. So for example, we see here that this price point touched this line again, and then touched it again right here. And, by probably the second touch or the third touch, people are starting to say, okay, this is probably a support. The more times that the price point touches this EMA or, support or resistance, anything, the more valid it becomes. So if a price point touches the support one time, it's probably not that significant. But if it touches it twice, or if it touches it 4 times, or if it's like continually touching it every single day over a 6-month period, obviously the 6-month period is going to be the most significant. So just something to keep track of when you're investing. And then one last thing I'm going to go over is the psychological resistances. So in investing, a lot of people they'll see this like $5.50 mark and they'll say, oh, you know what, that's where I want to sell. Or they're going to say, oh, that's where I want to buy. So commonly you'll see a lot of, support or resistance at, every $0.50 mark. So for example, I think there's one, we'll probably find one in here. So yeah, right about here, we can see a couple candles touching this line if we were to draw this line all the way through. And then another thing to keep in mind is volume. We see in this example how there's a lot of volume when the price is going down and not much when it's going up, and that just means that there are a lot of short sellers. There are more short sellers than there are regular buyers. So if you try to take a buy right here and you think that the price is going to go up, well, you just lost 12%. So volume is one thing to really keep track of. And, if this price were continually going up, but this volume down here kept going down, you wouldn't want to take this trade because nobody is interested in buying it. The price isn't going to go anywhere beyond here. And I've seen a lot of examples where the price just keeps going up and somebody, including myself, would take a chance, take a investment right here. And then all of a sudden, the price. The volume is one really key thing to keep track of. But that pretty much sums it up for this video. There are some patterns that are very useful in investing that I can provide a few links in the description for. But other than that, that's about it. That sums it up for the video. Don't forget to like and subscribe. See you guys later.